I love that sideways breakout just said born ready. That's funny. Yeah, so me too. There's so much going on in the market the last couple weeks. I'm Jason. I'm with Kashop. This is a Holy Macro show. We're on every Friday at 10 a.m. talking to you guys about what's going on in the macro markets. Kashop and I cover it all. Whether you're looking at gold, whether you're looking at different commodities, whether you're looking at global and international markets, you're looking at individual stocks, you're looking at bonds, you're looking at crypto, currencies, whatever it is, we cover it here every week at 10 a.m. So definitely join us if you guys get some time. But yeah, there's been a lot of interest in just understanding what's going on with energy lately. And this is a chart I wanted to bring to you, thinking about this from a fundamental angle too, which is when I'm looking at this, I'm seeing the fact that GDX and GDXJ are obviously outsized winners. But the biggest thing that stands out to me is that steel stocks, copper miners, metals and mining, lithium, these are all up as well and outperforming the S&P by quite a bit, nearly double on every single one of these sectors. The only one that really hasn't joined the party is XLE. And to me, looking at the energy sector, I don't want to bet against something that most likely won't happen. I haven't seen a commodity cycle, and this is what I research more than just about anything else. I haven't seen a commodity cycle where all of these sectors start to move, and then energy just is the one left behind and left for dead. That's the bet I don't want to take right now. So, I'm wondering what you're thinking about this right now. Are you looking at the energy sector much? Are you seeing much value there at the moment? Is it a trade where you're looking at the small caps in there? Are you looking at the large caps? Any names that you like in it? Obviously, I know you keep some for your subscribers, but any names that should be on people's radar to watch as possibly a bellwether or something.
So I love that you asked this question, and it was a question that I asked myself as well. So we have seen gold move, we have seen silver, palladium, platinum, copper, pretty much everything move. And the only thing that's lagging is oil, and looks like gasoline is breaking down pretty hard. So I asked myself this very question whether this will continue or whether even the laggards will start to pick up. So the stock that I recommended to subscribers last month, the most recent stock pick, is an energy play. And I think it is primed. The thing is, when you're buying energy right now, you're buying value. So you're not buying momentum. Now, what is the problem with buying value? You're kind of not going to get support from the markets. That's the definition of a value stock. A value stock is a stock that's appealing only to value investors. And let's face it, value investors are a dying breed. And if you run a value fund, chances are you're getting redeemed. So the liquidity is flowing the other way from value towards whatever is working, right? So if you're buying value, then you're kind of going against the liquidity trend. And if you're buying energy right now, that's what you're doing. But the nice thing about buying value is if you're prepared to wait, then you can get pretty much outsized returns in the long run. And the reason is, unless you're Jason or someone who is in markets who is sitting in front of a screen or has a way to figure out when the breakout's happening, chances are you're going to miss it. So you're going to miss getting in on the uptrend. So if you buy value and wait, you will probably be a few months early or a few weeks early, but then when the trend turns, you're in. So that's the proposition that I made to my subscribers when I picked this energy stock. And it's a melt up market. So that is pretty much, if you have new capital and you're sitting on the sidelines and you're watching every single thing you own go up every single day, every single hour, and you're like, man, I have so much cash sitting in T-bills, sitting in my bank account. I get paid every month, and all that cash, I can't really put it to use. What do you do? Well, then you buy value, because when the momentum turns, or even if it doesn't, you're sitting on solid picks which are going to outperform cash. So that's the way I'm looking at the energy trade. I wouldn't be a buyer of gasoline today. I wouldn't want to be a buyer of crude oil the way it is looking right now. But energy stocks, yes, I think it's primed.
Yeah, when you look at the whole sector, it's just like there's so many things in there that are just starting to move. And that's the thing that I keep thinking about, which is okay, if you look at Baker Hughes, we're starting to see some movement there. You look at some of these international names, we're starting to see some movement there. And I think the hardest thing for people to do here is probably going to be buying the winners. Like that's going to be the hardest thing to do. And this is part of the reason why I brought this chart up first, which is, I put at the bottom just so I remember, why do I buy the leaders? And so if we go back to April, if we look at the GDXJ and GDX, if you remember in April, what's funny is every single person we know came back to us, at least me for sure, and said, "Oh, the gold trade's over. See, guys, that was stupid." And really, it was like if you look at the whole broad market, I actually remember there was a guy who called me and Sam idiots for talking about silver at that point, and like wrote this like large post about it. And it was just like, wow, man, you need some a hobby or something in your life. You're really wasting your time here. So he was just very upset about silver going back down because and everything got shocked at that point. But why I'm bringing that up is if you look at where GDX and GDXJ were, they were the leaders still. So those being the leaders and continuing to show that relative strength, even when the whole market was negative. And that's the thing that also you saw in international stocks at that point. International stocks were positive still year to date at that point. And so now that we're all the way over here, now we're in what, October? Sorry, I'm very bad at dates. Now that we're in October, it still seems like the leaders are continuing to just lead. And most of the time that's how it goes. You have these catch-up trades that do happen. I'm not saying they don't. But I'm saying most of the time you want to own the leaders, and usually you're going to make more money by year end. But also now we're kind of looking at XLE, and for me, that real entry point to get really excited about it. And I think Kashop's right. There's value in that sector. I'm not saying there isn't. If you're a good stock picker like Kashop, I'm sure he could find some of that value. But for me, looking at it and going, okay, I really want to see XLE start to overtake SPY. I think that'll happen. I think that's going to happen probably pretty soon. And then when that happens, I also want to see oil really perk up. Kashop brought up a great point. Oil looks like shit, really. I mean, I don't know how else to say it besides it just looks terrible. It's been moving sideways. Every time it catches a bounce, it goes back down. There's all types of there's data going both ways in the United States. Either we're having an oversupply, either we're having an undersupply. I mean, it just goes back and forth every single day, and so nobody knows what to believe. And so when we're looking at something like that, I really want to see oil really start to show a trend. Now, that's the thing with oil too, and this is something we could talk about a little bit more. Oil doesn't just go like, hey, I'm oil and I'm just doing great every single day. Most of the time, oil is really choppy, really annoying, frustrating to trade. Kashop and I know this our entire career. It's been a frustrating trade for the most part. Getting into trading back in the 2000s, it was this big bounce that happened at the end of the 2000s. And then it was sideways, sideways, sideways. Then it was downtrend. Then it was, everybody who had an energy fund basically said, I don't have an energy fund anymore by the time it was 2017, 2018. Perks up a little bit for a minute, drops back lower, sideways mess again, basically until 2020. We get that negative print on the front month contract, negative $50. We bounce from there. It never really looks back after that. And that's kind of how oil always is. So this is why oil is always kind of that catch-up trade that happens at the last moment. It is one of the biggest sectors that we're looking at here. If we're looking at GDX, we're looking at XME, which is also a big sector, but we're looking at COPEX, lithium. XLE is a big sector. So when this thing's really going to move, that's going to tell you so much about what's going to happen with oil, with gasoline. And also, I think a good point that Kashop brought up about like the stocks look better than the actual underlying commodity. Most of the time when you see that, that's a good risk on signal that somebody, either there's nobody left to sell the stocks, which is also a good sign, or it's a situation where people are bullish on that sector and people keep buying that sector, but there's no real momentum in it yet because not everybody's starting to FOMO into it because we're not seeing the underlying asset really move. So I think the biggest thing here for me is I don't want to bet against energy. That's the biggest thing I'm going to say today, which is don't bet against energy. I wouldn't doubt that it goes higher. I wouldn't doubt it looks similar to XME in the next, 6 months. But I also want to be patient here with some of these things. If I'm going to buy, I want to buy strong names in the strongest sectors inside of the energy sector at the moment, and then possibly moved on and start to get into some other areas.
So, if you go back to 2011 or 2010 and you told someone that in 10 years, Apple would be worth $1 trillion and ExxonMobil would be pretty much written off, no one would have believed you
No.
because Apple had been through two big crashes, the dot com and the GFC. And it wasn't even that big a deal back then. Yeah, sure, you had iPhones, but then you also had all these other phones, and smartphones as a category itself wasn't that big a deal at that time. And $1 trillion, Saudi Aramco, maybe people would have thought that that's worth $1 trillion. Apple, no. And now these market caps that we give to tech companies, everyone thinks it's commonplace. 10 years from now, it's going to be completely the other way around. I can see a big miner, maybe not BHP, maybe not Newmont, but I can see a big miner overtaking Micron and Intel and Broadcom and all these companies in market cap. And, that would be the next big thing. And it's totally possible for copper to go to $20, oil to go to $140. And if you look at it in inflation adjusted terms, that's nothing. And the reason is we have already seen $140 oil twice. So it's just, and it's like silver, $50 silver. Yeah, we have seen it before. Silver is just catching up. So when we see these big moves in commodities, what we are really seeing is they are just catching up to where they left off in the previous cycle. It's not the start of a major run or anything. It's just they are catching up, then they'll consolidate, and then you're probably going to have a much bigger cycle coming soon. And the reason for that is because these cycles are pretty long cycles. So if you read the research papers, if you look at the old cycles, you'll see that they can last a good 20 years with corrections in between. And I think we are right now just at the beginning where they are catching up to where they left off in the previous cycle. So it's a long way to go. And I know it feels weird to say buy parabolic charts. So that's not what I'm saying. But if you think over it in the bigger picture in a few years, I wouldn't bet against any of the commodities. I think they are all going to be higher. It's just that it's going to get a lot more volatile from here because there's a lot more momentum, there's a lot more liquidity flowing into the space, and that sets you up for big reversals. So if you spot those reversals, I think that's going to be the time to deploy new capital in this space. So this is a topic that I think Jason spoke about in his previous Substack, which really resonated with me. Like, when do you take profits? When do you pyramid? When do you add to positions when you're up 600% on a stock? Do you add? And these are also the questions that I need to address to my subscribers. So let's talk about in this show.
Okay, cool. Yeah, no, it's that's one of the hardest things to do. I think it was a question that came up the other day, which got me thinking about it more. Somebody was like, yeah, for people like you who've always, been in this trade for the last couple of years, yeah, it's easy to hang on to these trades. And I just said, no, that's not it at all. I'm like, that's the hardest thing to do as a trader. And you have to think about it from, early trading for everybody. When you're an early trader in these markets, you're always selling strength because every time you get a profit, you think it's going to disappear. And every time you're at a loss, you're going, oh man, I could probably add to this position. I'll double this position right here. I'll make so much money when this thing goes back up. And you just do all the wrong things. And really, it's hey, you have a loser, take that small loss, walk away. It's going to happens to all of us. Every single person who trades has lots of losers. I don't care what, you're seeing on, I see so many Twitters now, like where it's like, look at my profits, million. What's funny is this happened, and you remember this, Kashop, for sure, which is the end of 2020 into 21. Every single person was sharing their P&L, like, yeah, look how great I'm doing. I'm killing it, And not to mention, I'm even seeing like some people using like Microsoft Paint to build this up, and they're all showing these massive returns, and good for them, great. But the biggest thing I'm going to say is all those guys usually disappear. Like, it's not a situation where I saw any of them in 2022. I didn't see him either in 23. Didn't really see him in 24. Now 25, like, and that kind of tells me like things are getting a little bit frothy here. There's a lot of people starting to be very bold and talk a lot about how much money they're making. And I want everybody to make money. I hope everybody does. I just know that's not the case. That's not how trading works. If that's how it works, everybody would do it. Nobody would work real jobs, and everybody would sit at home just trading the markets. It'd be the easiest thing in the world. But it's one of the hardest things to do. So what do you do when you have these big moves? Like let's say you are one of those traders. The one thing I would say about them, if you're looking at if you're looking at a 500% year, 1,000% year, you have to be trading some serious leverage with some serious size, which then means if anything starts to go against you, you might have a 500% return, but then you're going to go to negative pretty quickly. So once again, it's all about position sizing. So if you're able to have that position sizing, and that like to my stop loss for each position, I'm going to lose 1% of my portfolio, and then I'm able to hang on to these positions and let them run. And that might turn into bigger losses compared to the portfolio at time. But over time, it's like, if you have something that doubles like a GDX, okay, now that's turned into 2% of my portfolio. Let's say it goes up more, you get 3% of your portfolio, and so on, and 4 and 5. I don't mind that because you're basically compounding on those gains. But if you're doing something like, hey, I'm gonna, just add to the position, keep pyramiding and pyramiding and pyramiding, like now you're talking about like 20-30% of your portfolio. One trade loses everything. So then let's make it when do we get out of these trades then? So if we understand the position size and we're trading the position sizing right, when do we get out of these trades? And the answer is, for me, when the trend breaks. And for everybody, I think that answer is going to be different. For me, I always stick with the trend because I have all types of ideas, and most of my ideas don't make me a lot of money. What does make me a lot of money is understanding the trends and price action in markets. That's something that I've always kind of stuck to. It's a way to make a lot of money. And when I look at something like, a GDX or any of these miners in the portfolio that have gone up so much, like, I don't know where they end up. I think Kashop's right, where like we look at it we look back in a couple of years and we're like, holy crap, we're way up here. Like GDX went from 100% in a year and it sounded crazy. Now it's up another 400% in 5 years, because most of the time the strong trend usually continues to go. So I wait for this thing to break down. So it could be simply like long-term portfolio. You could look at a 100-day low. You could have a moving average crossover. You could have a trailing stop. There's a bunch of ways to do it, but also the trailing stop's probably going to be the easiest, but you're going to have to figure out how to do that right. And quick lesson on that. I won't go too in depth on that subject, but a quick lesson is, why do people hate stop losses? Everybody hates stop. Everybody I talk to in the world is like, oh, stop losses are terrible. And I'm always like, they're the best thing that I've ever found in trading. What are you talking about? And when I talk to them, they'll be like, oh yeah, I put a stop loss, it gets hit again, it gets hit again and again. And I'm like, okay, you're right. So if you go through back testing, and I've shown this on my channel, I'd have to go back a while to find this stuff. But if you basically have like GDX, let's say I'm taking 100-day buy, just to make it easy, I'm taking 100-day high buy signals. Basically, when it hits a 100-day high, I'm going to buy this thing. This would have entered the position last year at some point. So I get into this position. Then I use a, let's say, 5% trailing stop. With the volatility of GDX, I've been stopped out, probably every other week. So I would have never made any money in this trade. But GDX, understanding how volatile mining stocks and energy stocks and all this, basically the entire sector for commodity sectors, understanding the volatility of that, I'm going to set my stop loss to possibly 25, even 30% at times. And that's going to be a trailing stop. It's going to follow this thing. So some people would go, oh man, if you take that trade and you lose 30%, Well, one, it's size to the portfolio. So if I lose 30% in one position, it's going to be 1% of my overall portfolio. So that's number one. That's the most important thing. Number two is when you have these types of moves and you're looking for these 100, 200, 300% moves. If I made, let's say GDX keeps going and we hit 200%. If it gets stopped out and I'm, 20% down from 200%, do I really care that much? I got to ride the whole trend. If I just sat there and I used my brain and I said, okay, well, I look at the macro and I say, we're in the right environment. And I look at the fundamentals of each stock and I say, okay, these are in the right environment. If I do all that, I'm probably going to figure out ways to get in and out of this trade constantly. I would say, okay, well, looks like technology is moving again. Maybe I should be out of gold miners. And that's not because I'm an idiot. It's because once you're in a trade and once you're making money in a trade, we're all subject to looking at our P&L and going like, I want to cut this and run. That's like the most important lesson I ever learned, which is understanding where I'm getting the hell out of a trade before I get in. Like that's the get the fuck out levels I always talk about, or like my scans that talk about that. Like that's what's the most important thing. I know where I'm getting out before I'm getting in, and then you're going to get out of that trade cleanly and then wait for another signal. That's the other thing. Like if let's say like, okay, it goes, because this is another question that'll probably come up. Let's say it goes down 20%, Jason, after that 200% move. And let's say in the 2 week, this question always comes up. Let's say in 2 weeks later, it goes back up and hits a new high. What do? Are you just mad? And I'm like, no, I just re-enter the trade. Be like, yeah, I lost 20% on the trade, but if it's giving me a new buy signal, I would just take the trade again. And there's lots of ways to do this. Fundamental traders will talk about like a signal that would get them out of a trade. I think it was me and Kevin Muir were talking in Canada, and he was talking about the yield trade, and he's also short the bond market as well. And we were talking about like, for him, it was if Trump ever came out and said, something about yield curve control and needing to control the long end of the curve, like he'd probably be out of the bond short trade. And like that makes sense for his trading and his methodology. For me, it's more of I'll wait till I get stopped out of the trade, or I'll get an exit signal. So that's how my methodology works. So everybody's going to be different, but you just got to figure out where you're getting out before you're getting in, and figure out ways to ride these big trends, whatever style of trading you're doing.
Yeah, and to just clarify one thing that Jason said, like he says he will enter the trade again when he gets stopped out and he gets another signal, but the position size will be different and the trailing stop will be different at that point because of the volatility. And that's the same way that I trade. So right now I'm sitting on some huge winners in the portfolio. So if I were advising someone on what kind of sizing they should have on those positions, I would not say you should put 12% of your portfolio in it just because I have a 12% position in it now. And I have a 12% position because it started out as a 2% position, grew 600%, became a 12% position. But if you are entering the trade now, you should definitely not do that, even if there is more upside. And it's the same way. So sometimes you get stopped out and then you get a smaller position to ride the rest of the trend. Sometimes you get to ride it the entire way. So there are many styles of trading, many ways to make money. But the one thing you shouldn't do is just ride downtrends, just keep adding to your losing positions. I mean, at times, yeah, when you're buying value, you're probably going to spread out your buy over a few weeks or a few months. So that's a different approach. But if you're just adding to a position simply because it's down, then chances are you're going to lose money. If you're going to buy something in a downtrend just because you hate it and I mean, you love it and you want to see it move up, then you're probably not going to make money. And I've seen this countless times in the commodity space. Like we were talking about XLE earlier, but if you look at what people did with the shale companies, everyone fell in love with the shale story and they started buying these companies in the downtrend, even though they had high debt to equity ratios and the fundamentals were deteriorating. And it's the same with the offshore drillers. Like it's a sexy, sexy story, right? Like you have these offshore drillers. Without them, none of these offshore oil fields can run. So you buy these stocks and they haven't moved in 10 years or whatever. And every time there's a new hedge fund manager pitching it, or Canadian lumber stocks, like they are deep value, they have to go up. and there is more money on deposit with the US authorities than the market cap of some of these companies. So you have all these great value stories, but the point is, until it works, you're going to be sitting there and feeling miserable if you're not heeding the price action. So whatever style of trading you pick, and there are many, just avoid some of the losing styles. And they are losing styles for a reason. It is because they just don't work, they don't have a history of working. And if you look at the deep value guys, even the value guys, they've had pretty miserable lives. Maybe their trades do work, and I do love value, it's not like I don't, but if it's out of style, just don't employ it. So right now, another example of a style which is not fashionable right now, which I wouldn't use right now, but will work at some point, is mean reversion. Right now, it's a melt up market. Everything is going straight up. Do you want to have mean reversion positions in a market like this? Not really. You need to have trending positions. In a different market where there is nothing but chop, yeah, you definitely want to have that. So it depends on the environment. So it's not that some styles work, some styles don't work. It's that almost all styles work if you apply it to the right environment. So that's why we do macro, because the first thing that we need to do is identify the environment. And this is a melt up environment. There's no doubt about it. So it's actually pretty easy. There were years like, say, start of 2023, it wasn't very clear whether the 2022 recession was done or not. So, you couldn't really figure out what the macro was. And then it got clearer. And after September 2023, it got really clear. And now, if we have another crash like the one in April, then maybe that will change. So, you just have to pick the styles and pick the environment. And if it doesn't work, just wait for the new environment. So, that's really the gist of it. So it's not that one trading style is superior or another is not. It's not that this style works or that doesn't. It's just about figure out the environment, figure out the style, and more importantly, figure out if you can implement that style. So if you tell me to do nothing but trade breakouts, I will go bonkers because that's not who I am. If you tell me I should do nothing but buy value, again, I'll go bonkers because that's not who I am. So I know my style. And if you tell Jason something like, he has to pick only small cap stocks, that's not going to be his comfortable thing. He
Yeah.
likes to trade futures. You ask him what's happening in Norwegian power markets today, he will be up to date on it, whereas most of us will have no clue. So you have to pick the environment, the style, and make sure it fits you. And if you do that, this is a great market to make money.
Oh yeah, and that's the thing. It's all about environment and understanding these, like, what type of market are we in at the moment, and it's easy to see it's a melt up environment. Buying breakouts will make you a lot of money at the moment. And certain times the market's very range bound, and you're going to make more money as a range bound trader. The nice thing about, and part of the reason why I trade so many different things in around the world, is because there's usually something trending one way or the other. I mean, I go long and short. So, you can find something that is going down. Somebody had said to me the other day, Kashav, I thought this was funny. They were like, "Oh yeah, or you never put on a short position. You're the biggest bull ever." And I was like, that if you actually like Google my name, the biggest thing that comes up trading for me is the oil short. The oil short to negative 50, because if it's trending one way or the other, I will do it, especially in commodities. Like, you can't be a successful commodity trader in the futures market and only be long. Um, you know, Corn and soybeans and wheat have been shorts for God knows how long at this point. You just can't go like oil. Like, oil doesn't, it trends, but it trends up and down pretty quickly. Same thing with all the commodities. They trend up and down. Like, there's going to be a point on here, I'm sure I'll be like, yeah, I'm shorting gold. Hasn't happened in a long time. Obviously, gold's been strong, and even when it's consolidating, it wasn't really breaking down. But if it did really break down, I have no problem going short gold. So the next thing we're looking at here, and I'll get to your questions in a second. Just want to get through a couple of these charts. But we're looking at the 30-year yield. So this was interesting, which, they cut rates. It bounced a little bit right as that happened. So it got a little bit of a bounce, and then it came back down. Today it looks like I'm actually not up to date on TLT. Can somebody tell me where TLT is today in the chat? Now that we started around the open, but I'm still looking at this to probably head higher. Um, and this is here's the biggest reason why is it somebody out there knows something, and just like Kashop and I know, if we're looking at more liquidity coming in the market, because really, what does the Fed lowering rates do? It creates more liquidity. Borrowing gets cheaper for banks; they can lend more money and so on. Quantitative easing is another form of easing the market. So between those things, like if there's more money out there and inflation is so sticky that every American can see it, like everybody in America can see it. If you go to Europe, you can definitely see it. Everywhere in the world, they're talking about inflation being sticky, except for in the markets. Somehow in the markets, we're also insulated from it. That people are like, "Did you see oil?" Like that's the only thing people ever bring up to me. And I'm like, oh, gold is much higher, silver is much higher, platinum, palladium, gold miners, metals and mining sector. I could base cattle, hogs. I could go down a huge list right now and talk about all of the things that are in uptrends. However, people only really look at gasoline and oil and they go, oh, gasoline, oil, energy prices haven't gone anywhere. This isn't a commodity bull market unless those start to move. I think really the catalyst for that to really happen, and part of the reason why like they can lower rates here is because oil hasn't moved. But oil will move. We're not in a new system where oil is never going to move again. People keep thinking that. Go look at coal stocks. Tell me how those are looking right now. Yeah. Thank you. TLT 8942. But go look at coal stocks. Tell me that coal is, looks terrible and that we're never going to use coal again. Like India is building new coal plants at the moment. So China uses a lot of coal. We still use a lot of coal in the United States, even though we pretend we don't. It's still used globally, and a lot of these stocks are starting to pick up really nicely. There's some good buys in there. We did have a recommendation this week on one of those stocks. So definitely check that out if you haven't. But yeah, like inflation is just under the surface. Coal stocks moving. If this is another thing that kind of goes back to the last chart, which is if coal stocks are moving, is there any possibility that energy doesn't join the party? Like that's the biggest thing I keep thinking about. Like, okay, coal is like some of these names are just ripping, like right off the lows. I looked at my relative strength stock sheet, looking at all of those, and I'm like, okay, why are 20 coal stocks sitting at the top of this? And so many people would be like, well, we don't use coal anymore, because that's the argument I keep getting for energy. Oh, well, energy's not going to move. These companies aren't, really, oil is dead and blah, blah, blah. And like, solar's taking over and all this stuff. It's like, number one, those companies like ExxonMobil, if they want to, if solar is the most profitable thing in the world, it is not. But let's say it is. They could own that market in 5 minutes. They could buy up every company they want to. They could decide they're going to be in that. Carbon, they're already involved in that. They're involved in a lot of different things in a lot of different areas that a lot of people don't understand yet. So I think that that's going to be also something significant to continue to watch for. But I definitely think the way to look at this is yields will probably go higher. And I think this is probably going to happen very soon. I'll go through a couple of reasons coming up. But what do you think about the Fed right now, Kashop? Are you thinking that we're in a situation where, the Fed will just kind of continue to lower rates until it gets out of control? Or do you think they're going to actually stop and do something like they've never done before?
So it all depends on whether or not Trump gains control of the Fed. So usually the Fed just prints money. They do whatever the president says. But in this case, for them, there is a little more to it, because if they are seen to be printing money now, then what is the difference between the US and Zimbabwe? So, or any other nation which has experienced mass inflation or hyperinflation. So, the pretense of central banker independence from political control is the only thing holding fiat currencies together. And if the Fed just keeps cutting rates and Trump keeps appointing his people to the board, people are going to lose confidence in the dollar. And that is going to be pretty swift. It's not going to be gradual. So this year we have seen the dollar index fall something like 11-12%, which is a big deal, but it is not so noticeable that people are talking about it. People are still talking about the AI trade. They are talking about gold. Maybe now they are talking about, oil not doing well or no inflation, all these things, where the dollar index falling 11-12% and all the European currency is rising. No one's really talking about it. But let's say you follow this up with another year in which the dollar falls 15%. Now we are going to have significant inflation in the US just because of the trade deficit and the fact that you really need to import everything in dollars. So you're going to feel that impact. And when that happens and you see the Fed cutting rates with inflation so obvious and blatant, what is going to happen? Well, there's going to be a run on the dollar. And the US cannot impose capital controls like India has done. So what happens then? Well, then you get people buying foreign currencies and you get to a situation where it becomes very, very difficult to sell treasuries to foreigners. And when that doesn't happen, then the Fed needs to print more money to buy those treasuries. And then it's a vicious cycle. And that's the doom loop. So the Fed doesn't want the dollar to enter the doom loop. And the reason they don't want it is because the Fed is a semi-private institution, but it is more influenced by the commercial banking system than the president. So Jamie Dimon and Larry Fink and all these guys, they have uh, the Fed governors will listen to their words more than they'll listen to the president. So, in this situation, it is in the interest of the commercial banks, it is in the interest of the banking system, it is in the interest of the Fed governors, all the regional banks, everyone to make sure that Trump doesn't get outright control because once he does, then it's on to hyperinflation. So, in order to avoid the outcome, I think they will put up a damn good fight. I'm not sure if they'll succeed, but I know they're going to put up a fight. And in this scenario, the best thing you can do is just avoid the dollar. Own Swiss francs, own euros, own Brazilian reals. The shittier the currency, the better it's going to do during a bull run. And that's just the way these cycles work. Like you might think, are you really saying buy the Turkish lira and you're going to be fine? Well, not really. But if these pigs start to fly, even the Turkish lira will fly. So, maybe that trade works too. So that's what happens in a weak dollar cycle. And I think we are just at the beginning stages of one.
Yeah, I think the Swiss franc's actually a good one, and that's one where like if people ask me like there's people who have a lot of wealth, and when you have a lot of wealth, like you start to wonder where you want to put your cash, because you still need cash on hand, and so like going to things like Swiss francs, I think is one of the best ideas that I've continued to just kind of say. The euro is the euro for me. It's always been a tough thing to buy. Long term, trading wise, fine. I have no problem with it. But long term, like putting my money into euros, I'd rather put them into Swiss francs at the moment. I think that makes the most sense currently. But another thing, just going through some of these charts so we can get through them quick and get to some of these questions. Sorry, I just realized we talked a little bit long and I had a bunch of charts I wanted to get through. But the 10-year yield seasonality. So Grant said this to me yesterday. And I was just like, it's kind of interesting. Now, once again, I'm not a seasonal trader. I don't really look at seasonals and go, this is what I want to do. Most of the time when I'm looking at a seasonal, I want to see what the market isn't doing. Like if we're looking at the possibility of the yield break, the 30-year yield breaking out here, the 10-year yield as is pictured here, breaking out here and finally making new highs and getting back into that uptrend. And let's say in October, it goes the other way. Yields continue to break down. That would be a risk that I would say is going to hit the energy market pretty heavily. There's not like people keep betting on both right now because like, hey, oil looks cheap or energy looks cheap and oil looks cheap and bonds look cheap. And so people are trying to just buy all of these at the same time. There's going to be a winner and a loser. Long term, I think energy is going to be a winner. It might take a while if the situation happens where bonds like TLT start to rally. That would take us out of that trade for a little bit, I think. But either way, that's going to just lead to more inflation at some point. If some sort of crisis happens and they have to cut rates, and let's say oil drops pretty heavily, that's going to lead to an oil rally as well because they're going to continue to cut rates, continue to flood the market with more money. This isn't something that's stopping, even with inflation being sticky. So I think that we're going to see more money continue to come into these markets. And it's either going to be because of a crisis, or it's just going to be, hey, we're getting a lot of pressure politically. We need to keep doing this. And either way, it's going to end up in more inflation going forward. So this is one to watch out for. If the 10-year yield starts to break down this month, I would say that's a warning sign for everybody to pay attention to. Copper and the 10-year yield. So the market's at a make or break point. And this is something that should be on everybody's list, which is yields are kind of making lower highs here, while copper's making higher lows, and they're both just kind of consolidating around the same area. This is going to hit a decision point at some point. I think that decision point will end up with yields higher and copper higher. However, I'm open to it moving both ways because nobody knows the future. So if we're looking at this is another one to keep on your list. If yields start to break down, if copper starts to break down all at the same time, that's telling us something, and we need to pay attention to that as well. Bitcoin versus the dollar. So Bitcoin's getting up there back to 120. Kashop, I wanted to pass this one to you. What do you think about this? I know you've been pretty bearish about Bitcoin lately. It's something that when Kashop and I even met, like Kashop was already long Bitcoin. We've been trading Bitcoin for a long time. So a lot of people talk about Kashop like he's a perma bear on Bitcoin, but I know differently. So say a little bit about what you're thinking here. Do you think there's a possibility of this thing continuing to trend higher? Do you think it's just liquidity kind of boosting it a little bit? Or do you think that this thing's going to turn over and roll over pretty soon?
So the old Bitcoiners like me, so I've been long from 2016 to 2024 when I finally got off the trend. So the old Bitcoiners like me have done a very good job of talking about how Bitcoin can make things different in terms of, you don't need the banks, you don't need all these custodial solutions, you can control your own wealth, all these anarcho-capitalist philosophy. So we have done such a good job of it that we have convinced the world that this is the future. And the future that Bitcoin has got now is the one which is completely against everything that the old Bitcoiners used to preach. And this future is basically Bitcoin has become a momentum asset with a cool story and a long term uptrend behind it. If you look at the tech, there's a huge debate going on now, core versus knots. If you look it up on my timeline, you can find it. And that's a very divisive split that's happening within the community. So the price action looks good, and that's because people are treating it like it is a commodity, and it is a commodity. But unlike copper or gold, which are elements which are not which are immutable, Bitcoin is not. So there is a big proposal going on about code changes right now, and if those code changes happen, then it's not exactly immutable. It's going to be different code with the same name, or maybe it splits into two coins with different names. So there are all sorts of possibilities. So if you're trading Bitcoin right now, you're fine. But if you're thinking of it as a long-term hold and you think, the chart looks good, let me buy it, the fundamentals, technicals, everything aligns, then you need to be aware and take a side on what will happen in case the debate is not solved, the core versus knots debate is not solved. So for me, it's a tough call because, yeah, it's a great trend and the financialization, the momentum has worked for those who manage to stick with it. But as for how much more it can run, I really don't know. So if I were looking at crypto right now, I would be looking at all the other cryptos. So BNB, it's got a massive tailwind behind it. Solana, it's got a massive tailwind behind it. So I would be looking at all the others. But in general, I would just say, unless you are just trading this for the short term, just avoid spending too much time on the crypto space and get into the gold space, get into the commodity space because you're going to have a much longer uptrend. So it's not that Bitcoin is not going to do well or crypto is not going to do well. It's that if you have limited time, limited energy to dedicate to markets and you're doing fundamental research, you're better off doing it in the mining, the commodities, or pretty much any other sector, energy, materials, anything else than crypto because crypto is saturated right now.
Yeah, I think that that makes sense. I mean, look at all the treasury Bitcoin treasuries that continue to pile up, and it's just kind of it's getting frothy there. So I'm still long Bitcoin, I'm still long ETH. I like Solana and so on. We've been talking about these things, but I do agree with you where it's like, and for me, like, let's be honest, my whole idea isn't anything fundamental. It's, hey, this thing's in an uptrend. I'm going to continue to ride that uptrend. We're in the right environment for it to do fine. But I do think that if I'm looking at something, I'm going, hey, where can Bitcoin really go? Can it really like double again? Because that's what everybody continues to do whenever they make these grand predictions for Bitcoin. It's like, hey, this is like in 20, like when we were trading Bitcoin at the beginning, there was days that were so crazy. And like people like wouldn't even believe us when we talk about like 50% days. like I remember like one day it was up like 50% a day and then it fell like 40%, and then it fell another day like 30%. Then it was within like another week, it was at a new high. I mean, that's how Bitcoin used to move, is because it was didn't have a lot of liquidity. There wasn't a bunch of money in it. Now there's a lot of money there. This is a big asset. It's kind of like when you look at the old .com stocks in the 90s. Like, yeah, they had some huge moves. I mean, if you look at it, I mean, if the Nasdaq will probably never have another 100% year, and I think we had like two of them in the 90s. So think about it that way. Like we've probably missed out on these like insane returns. Now, like Kashop said, if you find some of the coins, I don't really get into the small coins very much. That's not my thing. But if you can get into that, you could probably find some big moves there. But also, you could do the same thing in the commodity space. You could find some small cap names, some micro cap names that are going to move, 100, 200, 300%. And you're going to make a lot more money that way than trying to trade something like Bitcoin. Um, so let's get to the next couple. So these are just a couple things I wanted to highlight as possibilities of ways things could possibly go wrong going forward. So looking at the IYT, which is the transports ETF, this is something that I want to continue to pay attention to. One is, the world has changed. So everybody goes, oh man, transports don't matter anymore. They do matter. The ETF also carries like Uber and stuff in it as well nowadays. So it's not just a old, like we're just on rails now. We've moved on a little bit further past that. So as we're looking at this one, like I want to see this thing break out. One, it would tell me the stock market really has legs still, and we're going to continue to go higher. Two, it would tell me that most likely we're going to still see money flowing into these commodity based sectors like that showed up earlier. Small caps, IYT, transports. Everybody keeps telling me like, small caps love lower yields and blah blah blah, and like that's not true at all. Like if you go back and you look at some of the times where we had higher yields, value worked really well around those times. Small caps worked really well around those times. Micro caps worked really well around those times. And if you look from the Liberation Day lows, what has really led the way and made the biggest moves? And it's small caps and micro caps. So I could see this kind of being a scenario where this thing breaks out, yields also break out with it. Small caps continue to trend, and then these commodity based sectors continue to be the outperformers. TLT, this is another thing I want everybody to pay attention to. Above 101, I would want to be out of that trade. Out of the energy trade. So for me, there's a long way to go. This is just something to keep on your radar. I'm not looking at this and going, anytime soon, I'm going to get out of my energy trades or anything. I'm just saying, if this starts to get above 101, I'd be very cautious about the energy trade. And I'd probably come on here and say something a little different. But the one thing that will do well in either environment, and, Kashop said this the other week, which is gold, basically putting your money into gold and walking away, like you're going to win either way. If yields continue to go lower here and TLT continues to move higher here, gold's still going to do well. Gold might outperform the miners at that point even. So I'd still say, you still want to own gold either way this thing goes. And then just ending on the dollar, the one thing you and I did talk about, somebody brought up to me the other day, which is the fact that what do I think about the dollar rally? And it was this rally. And I said something back. I can't even really remember, but I was just really looking at it and going like, "What fucking rally?" Like that's a thing that I think about every time when somebody tells. Just because I'm so long term that like a 1 day move doesn't mean anything to me. Even a 5 day move doesn't mean anything to me. What would mean something to me on the dollar, and this is what I want to highlight today to answer that question, is if we got over 101 and we really start sustaining over these levels, that would really tell me that the dollar has legs. But I do think we're going to see some short covering rallies. That just makes sense. The positioning is the way it is. So I wouldn't be surprised to see a nice short covering rally that would put a lot of pressure on the stock market, and then we'd move lower. That would make the most sense here. So let me get to this question before we have to go. So I know that commodity stocks move more than the commodity itself, but how does one know how much more a stock can move? Is there a factor like production efficiency, market share, or the commodity itself? Um, so I'll go first, and mine will be quick, which is no. That's my answer. Now, Kashop might have another answer on this because that's more his wheelhouse than mine. But when you look at something like that, like, and you try to understand, like, okay, this could move more, this can't move more, that's going to get you into trouble most of the time as a trader. Because you never know. Like the thing I say all the time is you never know where your biggest winners will come from. You think back to COVID. I would have never thought that oil was going to be something I'd be in and going negative in the front month contract. I would have never thought that lumber after that would be my best trade. It's just simply like you don't know where that happens, but what you can do is find that relative strength. So when you find relative strength and you get into these positions and you're like, okay, the gold miners are outperforming. That's where I want to be. That's what I do. And so Kashop is on the other end of it, which is finding those fundamentals inside of it and figuring out what those individual stocks can do. For me, in the individual stocks, I go, okay, looking at GDX, it's outperforming gold. Great. And then I go, what's outperforming GDX? Okay, these stocks. And that's usually how I do it and find stocks. So go ahead, Kashop.
So I did an episode of Gold Rush with Jason and Sam Gatlin where I talk about the Lassonde curve. That is the cycle, the life cycle of a mine. So if you can go back and watch that, so what I said is that if you are talking in terms of gains, let's say you're starting at a grassroots discovery where someone goes in and they stake some claims and they start drilling holes and they come up with some good drill results. Now, a story like that, it can run 50x, and there have been examples of this. And once they start delineating the deposit and they just keep making it all the way to the mine, at some point they're going to get acquired. But a story like that, it can easily run 50x even with all the equity dilution. So, but on the other hand, if you're talking about a stock like, say, Newmont, which has mines all around the world and they are aging assets, then how much can a stock really run? Well, there is a natural limit to it because at some point, either it gets so overvalued that you're just going to get off Newmont and go on to the other stocks, or it's just something or the other is going to happen, like an accident is going to happen that ends the trend, like we saw with Freeport earlier. So one of these other things will always keep happening. So it really depends on what stage the company is in and what is the market cap, what are the assets that it holds. So based on that is when you know when to get off a trend. So there's no formula or anything. It's just you need to understand the market. You need to understand, and that's why if you really want to know how much a stock can run, there is no answer. But if you subscribe to a newsletter like mine or any other resource newsletter, we will highlight when it is time to take profits or what is the potential upside if you continue to ride the stocks beyond a point. Like, so right now I'm sitting on a stock which is a 600% gain. So I'm going to be talking about this question because it's becoming a very relevant question. When do you get off? So that is my answer. And also the other answer I would give, which is exactly like Jason, is you never know when a trend will end. So you just keep riding it till the end.
Yeah, so we'll end it there. Thanks for the questions, guys. Thanks for all the comments in the chat. The one thing I do want to say, if you do want the charts today, if you sign up, subscribe to the newsletter. If you're on YouTube, you can go to the description, subscribe to the newsletter. Everybody that comes in the next hour, I will send you the chart deck for today. So all the charts that you saw today, you'll get the whole chart deck. And then you'll be subscribed to my channel, which you'll get to see, all the videos, everything I'm posting, trade ideas, free Friday posts, and so on. So definitely check that out if you guys are interested. Thanks for the questions. We'll see you guys soon. Kashop, anything to end on for you?
I think that's perfect. Thanks,
All right.
Jason. Thanks, everyone. This has been a great show.
All right, guys. We'll see you later.